the market vulnerable to a correction. Your words, even with these earnings as the backdrop, why?
Well, we're really closing in, Jonathan, our long-term target of 2,500. I think the market is kind of fairly valued now. It needs to get earnings to 140, 150, which we think it will over the next couple of years to make our next target, which is 3,000. So right now, we think there's 4 drivers that have been pushing the market forward, and all 4 of them are about to go into stall mode, basically. Yeah. And, you know, one is the fiscal side. The market needs tax reform. I think, you know, we're either going to go on to it, well, I like to say, with momentum or with desperation, depending on what happens with healthcare. But the sausage-making process has been so ugly, I think it's hard for the market to discount the reality of tax reform until we get closer to the whites of its eyes, and that's probably December, January. So the next is the Fed. The Fed's got to start buying, selling 10-year notes, right? And that's the balance sheet shrinkage to get the spread on the yield curve better, so the financials, who are a key part of the market, can start showing better earnings.
Well, not actively sell, but let them roll off at least. Do you think people are under-anticipating, underestimating what that really means for risk assets?
I think that my issue is actually the opposite. I think the Fed, in its initial attempts to raise rates and shrink the balance sheet, it's actually throwing fuel on the fire of the market. I've said that before on the show, so I think it's actually a positive. My concern is they're going to be in what I call apology tour mode over the next 3 or 4 months. Yellen is inherently dovish. She wants to not upset the market. So I think as she approaches the start of the balance sheet shrinkage, which is well flagged for September, the last hike in December, she's going to be very dovish in her tone. I think that's not going to help, really. I think the market actually needs to see the balance sheet shrinkage getting going, and I think it's going to be kind of slow going. So for me, that's, again, a kind of later this year, early next year development.